In a significant and unexpected development in the world of cryptocurrencies, President Donald Trump made a bold announcement regarding the establishment of a strategic reserve of cryptocurrencies. This reserve is set to include several major digital assets, specifically Bitcoin, Ethereum, XRP, Solana, and Cardano. The announcement was made via the social media platform Truth Social, a venue that Trump frequently uses to communicate directly with his supporters and the public. The news sent shockwaves through the cryptocurrency market and sparked a wave of excitement among investors and traders alike, many of whom viewed this as a pivotal moment for the legitimacy of digital currencies. Following the announcement, the cryptocurrency market experienced a notable surge in prices. XRP, the digital asset associated with Ripple, saw a remarkable increase, jumping nearly 30% to reach a peak price of $2.95. This surge was not just a minor fluctuation, it was a significant movement that reflected the optimism surrounding the inclusion of XRP in a national reserve. Many investors interpreted this development as a sign that cryptocurrencies were gaining traction in the mainstream financial system, potentially leading to further price increases in the future. The excitement surrounding the announcement was palpable, with social media buzzing with discussions about the implications of the reserve and what it could mean for the future of digital assets. However, this initial enthusiasm was short-lived. Within a matter of hours, the price of XRP began to decline sharply. By the time of reporting, XRP had dropped to approximately $2.48, reflecting a decline of over 10% from its earlier peak. This sudden downturn raised concerns among investors, many of whom started to question the sustainability of the rally that had been ignited by Trump's announcement. The rapid price fluctuations led to a wave of uncertainty, prompting discussions about the long-term viability of XRP and its role in the broader cryptocurrency market. One of the primary reasons cited for the decline in XRP's price was the significant sell-off activity occurring among large holders of the asset, commonly referred to as whales. These whales are typically individuals or entities that hold large quantities of a particular cryptocurrency, and their trading decisions can have a substantial impact on market dynamics. According to prominent analyst Miles Deutscher, there was a record level of offloading of XRP by these large holders within a 24-hour period following the announcement. Specifically, it was reported that over $120 million worth of XRP was liquidated during this time frame, highlighting the intensity of the selling pressure. Deutscher explained that this trend represents a distribution phase in the market, where large holders choose to liquidate their positions. This kind of behavior often results in a significant price decline over a relatively short period, as the market reacts to the sudden influx of sell orders. The situation was further compounded by the fact that XRP had experienced an extraordinary surge of approximately 500% since November 2024, driven by various factors, including Trump's election victory and the resignation of former SEC Chairman Gary Gensler. As a result, many whales may have felt it was an opportune moment to take profits after such a substantial increase. The implications of this sell-off extend beyond just the price of XRP. The actions of these large holders can have a ripple effect throughout the market, influencing the behavior of smaller investors. When whales sell off significant portions of their holdings, it can create panic among retail investors, leading to a broader sell-off that drives prices down even further. This phenomenon underscores the interconnectedness of the cryptocurrency market, where the actions of a few can impact the sentiments and decisions of many. Retail investors, who may not have the same level of information or resources as institutional players, often react emotionally to price movements, which can exacerbate volatility. Despite the initial excitement generated by Trump's announcement and the potential inclusion of XRP in a national reserve, skepticism began to emerge among investors regarding the feasibility of this plan. Critics from various political backgrounds expressed their concerns about the wisdom of investing taxpayer money in highly volatile assets like cryptocurrencies. Some argued that the inherent risks associated with cryptocurrencies could pose a significant threat to financial stability, while others questioned whether it was prudent to include altcoins like XRP in a reserve, suggesting that the focus should be primarily on Bitcoin, which is often viewed as a more stable and established digital asset. In addition to concerns about the selection of assets for the reserve, questions arose about the logistics of how the reserve would be established and managed. Would it require congressional approval? What mechanisms would be put in place to ensure transparency and accountability in the management of taxpayer funds? These uncertainties contributed to a growing sense of doubt among investors, dampening the initial excitement that had followed the announcement. The lack of clarity surrounding the proposed reserve and how it would operate created an environment of speculation and concern, causing many to reassess their positions in the market. Despite the prevailing skepticism, the significance of XRP's inclusion in the proposed national reserve cannot be understated. It highlights XRP's role as a key player in the cryptocurrency landscape and suggests that it has garnered recognition at the highest levels of government. This acknowledgement could pave the way for greater acceptance of digital assets within mainstream financial systems and may encourage further regulatory developments aimed at providing clarity and stability to the market. The potential for regulatory clarity is particularly important for institutional investors, who have been hesitant to engage with cryptocurrencies due to the lack of comprehensive regulations. Market experts weighed in on the potential implications of Trump's announcement. Federico Brocate, the head of United States Business at 21 Shares, characterized the move as a sign of increased government involvement in the cryptocurrency sector. He suggested that this could accelerate institutional adoption of cryptocurrencies and provide the regulatory clarity that many investors have been seeking. Such developments could strengthen the United States' position as a leader in digital asset innovation, fostering an environment conducive to growth and investment in the sector. The announcement also marked a notable contrast to the regulatory approach taken by the Biden administration, which has been characterized by increased scrutiny and oversight of the cryptocurrency market. Since taking office, President Biden has implemented stricter regulations aimed at mitigating risks associated with fraud and money laundering in the crypto space. In contrast, Trump's pro-crypto stance appears to signal a shift toward a more favorable regulatory environment for digital assets. This divergence in approach raises questions about how future administrations will handle cryptocurrency regulation and what that means for the market as a whole. As discussions surrounding the creation of a national crypto reserve continue, the upcoming crypto summit, announced by the White House, is set to bring together industry leaders and policymakers to address critical issues related to regulatory frameworks and institutional involvement in the cryptocurrency market. This summit represents an important opportunity for stakeholders to engage in meaningful dialogue about the future of digital assets and the role of government in shaping the landscape. The outcomes of this summit could have far-reaching implications for the regulatory environment and the overall perception of cryptocurrencies in the financial community. While the establishment of a national crypto reserve is a significant policy shift, its long-term impact on the cryptocurrency market remains uncertain. Analysts suggest that further price increases in cryptocurrencies may depend on a variety of factors, including potential rate cuts by the Federal Reserve and the development of a clear regulatory framework that provides guidance to investors and market participants. The interplay between monetary policy and cryptocurrency prices is a complex relationship, and many investors are closely monitoring economic indicators that could influence market sentiment. In summary, the recent announcement by President Trump regarding the creation of a strategic reserve of cryptocurrencies has generated both excitement and skepticism within the crypto community. The initial surge in XRP's price following the announcement was quickly overshadowed by a significant sell-off by large holders, leading to concerns about the sustainability of the rally. As investors grapple with questions surrounding the feasibility of the proposed reserve and the potential risks associated with investing in volatile assets, the broader implications for the cryptocurrency market continue to unfold. The upcoming crypto summit and ongoing discussions about regulatory frameworks will play a crucial role in shaping the future of digital assets in the United States and beyond. In conclusion, the evolving landscape of cryptocurrencies is marked by a complex interplay of market dynamics, regulatory considerations, and investor sentiment. As the cryptocurrency market continues to mature, the actions of key players, both in the private sector and government, will significantly influence the trajectory of digital assets. Whether the proposed national crypto reserve becomes a reality remains to be seen, but the discussion it has sparked is crucial for the future of cryptocurrencies and their role in the global financial system. Investors and market participants will be closely monitoring developments in the coming weeks and months, as the cryptocurrency community seeks to navigate the challenges and opportunities that lie ahead. Moreover, the potential establishment of a national crypto reserve could serve as a catalyst for broader adoption of cryptocurrencies by institutional investors. If the government officially recognizes and supports these digital assets, it may encourage more traditional financial institutions to explore the integration of cryptocurrencies into their portfolios. This could lead to increased liquidity in the market, as more capital flows into digital assets, potentially stabilizing prices and reducing volatility over time. Additionally, the involvement of the government in the cryptocurrency space could lead to the development of more robust security measures and regulatory frameworks. As the market matures, the need for investor protection becomes increasingly important. A well-regulated environment could help to mitigate risks associated with fraud and market manipulation, fostering greater confidence among investors. This, in turn, could attract a wider range of participants to the market, further legitimizing cryptocurrencies as a viable asset class. Furthermore, the discussions surrounding the National Crypto Reserve could also influence international perceptions of the United States as a leader in the cryptocurrency space. By taking proactive steps to integrate digital assets into the financial system, the United States could set a precedent for other countries to follow. This could lead to a more unified approach to cryptocurrency regulation on a global scale, promoting cooperation among nations and establishing common standards for the industry. As the cryptocurrency market continues to evolve, it is essential for all stakeholders, including investors, regulators, and industry leaders, to engage in constructive dialogue. The future of digital assets will depend on the ability of these parties to work together to create a balanced regulatory framework that fosters innovation while ensuring consumer protection. The outcome of the upcoming Crypto Summit and subsequent discussions will play a pivotal role in shaping the trajectory of the cryptocurrency market in the years to come. In summary, the recent developments surrounding the proposed National Crypto Reserve and the inclusion of XRP alongside other major cryptocurrencies represent a significant turning point for the digital asset landscape. While challenges and uncertainties remain, the potential for increased government involvement and regulatory clarity could pave the way for a more stable and mature cryptocurrency market. As the industry navigates these changes, investors and market participants will need to remain vigilant and adaptable, ready to seize opportunities as they arise in this dynamic and rapidly evolving environment.